Time to talk personal finance now, thanks to our partners Forsyth, Barr. Volatility can be scary when investing big sums of money, but it's also completely normal. Mark Richardson, investment advisor at Forsyth, Barr, here to talk to us about this morning. Mark, good morning.
Mate, it's scary when it's even little sums of money as well.
Well, that's true.
It's your money, isn't it?
Yeah.
No one likes losing it or seeing it go down in value. But it is, I guess, markets. I was sitting at my desk yesterday. And I was thinking, oh, what am I going to talk to today? And then all of a sudden, a preferred holding of mine dropped 10%. And my initial reaction...
Don't tell people that.
My initial reaction was to panic. And I thought, no, hold on, I'm an investment advisor. That's what you don't do. So we've got to find some rationality. But basically, you know, the share market moves up and down according to just flow of information. So it's always been fed information, and that's what tends to drive change. And as investors, we try to make sense of that change. But unfortunately, as investors, as a group, we're bonkers. We're irrational. And the market, there's a saying, the market reacts and the market overreacts, and generally will overreact. So what you have to do is basically sit back when this happens, and it's very normal. The market, in fact, will generally drop on average 10 plus % every 1 to 2 years. So this does happen. You've got to sit back and you've got to try to actually be rational about the whole thing. Do you need to take action? Don't you need to take action? Has anything fundamentally changed with this company that means it can't turn a profit, it can't grow, it won't have earnings in the future? Do I need to get out, or do I just sit through this, or is this a buying opportunity? And if it is, where do I take the money from to buy?
Because the thing with volatility is, yes, it's a scary word, but it also can be a good thing, right? Because it can go up.
It does. Well, it gives you entry points.
Yeah.
It's just something that you have to deal with as an investor on a daily basis. If you are struggling, so if all of a sudden your holdings or things that you thought were going to all of a sudden only go upwards started to come down, you've got to sit back and, okay, what is my reaction to this? Is this rational? Is there something wrong with this company? Is my asset allocation right for me? If I'm overreacting here, am I actually in too many volatile stocks? So what do I do there? If I want to buy, where can I take them from? What are the holdings that I have that might be actually fully valued, and therefore I can take a little bit of profit and take this opportunity? They're all things that you have to think of, and you have to think of them rationally. And I guess that's where a good advisor can help you make the right decisions.
What about having an emergency fund or a stash of cash somewhere?
Well, in your portfolio, you should always maybe have some cash on hand for the opportunities, to take these opportunities. But cash is money not invested. So you have to be very careful that you're not too cautious, you're not sitting on the sidelines, because more people have possibly lost money through not being invested than being invested. So yeah, it's handy to have a little bit in cash reserves, but you have to make sure it's not too much, or you're missing out on opportunities because you are invested in the market, and the market generally, well, history has shown, will move forward over time. It will have its up and down swings in the short term, but it will move forward if you can stay the course.
We've obviously had a lot of volatility in the market this year in particular, after the trade war and all that sort of stuff, but we're also seeing records being broken. We're seeing, intraday highs and records being broken there too.
Well, I mean, the numbers coming out are suggesting that maybe we're not headed for some sort of deep recession, that there is an opportunity for companies to make money. A lot of what's happening, because we're in the middle of reporting season in America, and what is often quite happening is these companies are actually reporting pretty well. They've actually, over the last quarter, turned profits, they're moving forwards, they're showing some earnings growth, but then they're also in their reports reflecting uncertainty of predicting what's going to happen in the next quarter. The market doesn't like that uncertainty, so the market might react, but then the market goes, hang on, the economic conditions actually for growth are still okay, so then the market takes the opportunity to actually then start getting back into the market.
Yeah.
And I think we're going to see over the next, this is my opinion, over the next decade or so, we could see a little bit more volatility on average because of the likes of algorithmic trading and AI getting involved in the system. So the computer will start actually making some decisions.
But would the computer not be more rational than us?
Well, I would argue not. The computer can often create self-fulfilling prophecy.
Yeah, true.
It'll follow trends and then overreact itself.
Yeah, true. Trends which we set in the first place.
Yes.
So, yeah, okay.
Yeah, we're all bonkers, right?
Yeah, and we make the AI bonkers too.
If you want to be a good investor, try not to be bonkers.